The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com, TFNN.mobi, anywhere on your mobile phone. You can watch our live screens, listen to 9 hours of live trader commentary each and every day. Let's check out where the market's at right now. We got the indices pretty flat. S&P right now is down just a few points. We have the Russell currently down 4, NASDAQ down 29. The Dow is currently down 23 points on the day, with copper moving up about 0.2%, not a big move there. Gold also relatively flat compared to settlement, up only up $1.80. So we had some nice moves yesterday. Things a little bit slowing down today. Oil choppy, up only 19 cents on the day. So we'll go and look at that oil inventory report here in a little bit. We got corn right now. Corn is up 6 points on the day. We got soybeans is down 4.5. Euro dollar is currently up a whole 10 pips. Not a big move there. We got the Aussie dollar. After last night's report, we'll go back, we'll check that out, down 81 pips. We got pound dollar down 45. We got the dollar franc is currently down 20. Dollar CAD is unchanged, flat on the day. Looking over at US yen, it is down 35 pips. Got Aussie yen down $1.10. Euro yen is down 31, and the pound yen is down $1.03. Euro pound right now is up 31 pips on the day. And that gets you caught up on where the market is. Let's go ahead and check out what we got going on with our news and walk through a few different things for you. I'll pull up a few charts as we go through it step by step and just lay out the news trades that played out, which ones are coming up that you can take advantage of this week. All right, so let me go ahead and we'll start off with a euro dollar chart. I'm going to put it up here on the screen for you. Just give me just a second. And there we go. Okay. So we got the euro dollar on up here, and we're going to walk through it, and I'll just load a quick template up on this one. There we go. And I'll probably also pull up Aussie and look at a few others. So you ought to be able to see that on the screen any moment now. And let's talk about the different reports that are available for you to trade this week that are, have happened and are happening. And so let's just go through and catch up on yesterday, looking at the 22nd. And we had, it's like the existing home sales. We had Aussie CPI. And then we got new home sales, Canadian retail sales. So we'll walk through each one of those and the plan that we put together on how to take advantage of them. Now, when I talk about how to take advantage of news, there's two things you want to be aware of. One is whether or not you want to trade the news, you need to know the news is there. Because it does, or does it impact the market? You need to be aware of it, so that way you're not caught off guard. The whole idea of diagnostic trading is to be one step ahead of the markets, to understand where the market should stop continuing to move, like at a deviation level or an expected movement. To understand when the market is moving more than expectations, like on volume, and using expected volume to actually break out of that level. To also understand when certain announcements are going to come out and what kind of movement they have expected on the market, so you know whether to tighten positions up, get out of the way, or dive in and take advantage of it, and just not be caught off guard. So that's what I want to make you aware of, help you do. And one of the things you can do is, if you haven't done it, hop on over, sign up for a Nadex account. It's free to get a demo account going. Go to Trading Demo Trading Account. It takes literally about 10 seconds. Fill in username, first name, last name, phone number, email address. Click apply for demo. Check your email. You'll be able to log in. They'll give you $25,000 of funny money that you can play with. Again, that's Trading Demo Trading Account right there. And again, this takes a few seconds for you to get access to. And you can use this to hedge your futures trades, your forex trades, your ETF trades. You can use this to do straddles, to do premium collection on news. There's a lot of different trades that you can do. And once you get used to it, then you can fund an account. Or if you want to use your demo extended, fund an account. The only required amount to fund an account is $100, literally. If you place one trade, that's a $3 trade. then you can email them or call them, and they will extend your demo out for a year. So that way you can start learning how to take advantage of the news, learn how to start hedging off your positions. So definitely recommend you go over there and check that out. But now let's go ahead and talk about some of the different ways that you could take advantage of the news this week. And let's see here. That's it. I'm trying to pull up a page, and it's just taking a second. Okay. For yesterday, last night, we had the Aussie CPI. So let me flip on over here to the Aussie dollar. And when that loads up, we're going to go in and we're going to focus on, like I said, a couple of things. One of them is going to be CPI. That came out at 9:30 last night, right over here. And go back to last night. Wait, that is not a news release hour. There we go. And it was funny. I was actually in a trade room with somebody, and they're like, "Can you check out and let me know what's going on with Aussie dollar right now?" And I'm like, "Oh, their CPI number just came out, and it was worse than expected. The expectation was 0.8, came in at 0.6, market dropped." We expected that to happen. Now, I didn't expect it to go down or up. Obviously, nobody knows that when a news report comes out. But I expected a movement at that exact minute. And not knowing that, okay, could have been very expensive if I was on the wrong side when that happened. Could have been a great thing if I got lucky and I just didn't know and I was on the right side. And you don't want to get caught off guard by the news. Okay, you want to make sure you're aware of it and when it's happening. So right over here, looking at this, checking it out, and we're like, okay, market moved down right there. Let's go ahead and go, okay, what were the expectations? What did we have when I walked through this report with you? And on the CPI number, we were looking for a move of about, let's see, doesn't usually move more than 50 pips. It's only broken that 2 times. And usually have a move of 30 pips or less. And the idea is try to bring in at least $30 to $50 on the trade. If you can do that, then that could actually be a decent setup. Obviously the more the merrier there. And so go, okay, well, how far did it move? Was it a bigger move than expectations, a smaller move? And so I'll check a couple things over here, high to low. See what we got there. That's, 10 o'clock expiration. Got 69 pips right there, high to low. So we actually got a decent move right out of the gate. If I took it a little bit further, 88 pips, it was moving on down. And then, it moved down a little bit and then just sort of exhausted itself for the day and hadn't done anything since. And where did it move down to? It moved down to 2 deviations. So that's a 5% expectancy, meaning we don't expect it to happen more than like 1 out of 20 days, or not even that, 5 out of 100 days. So, because that'd be a 20% expectancy. So right there, that's a really rare move. That was a big move for this report. And it's also good to be aware of that, so you don't just have this, oh, wow, okay, I need to trade the CPI every time and go for it. Well, okay, so now it's happened, 2 times in the last 12 months. All right? So let's go. Over here, what would have happened? Let's say you hopped in, right before, and there wasn't really a whole lot of, now if you would have done a straddle, it could have worked out great, but we don't really expect that massive move. And I know a trader was checking it out about 15 minutes before, and he said, he went in right before the news, and he's like, I looked over at doing an iron condor, but I couldn't really get that much money for it. It was about like $25 total, combined. So it really wasn't within the amount of money that would have been acceptable. And goes in, pulls it down. You're looking at the 10 o'clock, and it moved 80 pips. So, good thing he didn't. On the iron condor, we want to make sure we have enough money to cover the trade. Now, how bad of a trade would that have been? It wouldn't be near as bad as it looks like. But, it obviously would not have been the ideal trade. You would have got in, you would have got out at your 1-to-1, you would have moved on to the next trade, and the last 11 out of 12 have been profitable, so it's okay. But make sure that your trade fits. Don't try to squeeze it in and go, I just want it so bad I'm going to go for $15 or $20 in order to make this happen. Okay? And with that being said, that's Aussie dollar, big move, CPI report. So, that's now 2 in the last 12 there. And again, the pricing really wasn't there. If you would have hopped in at 6, you probably would have got somewhere between $30 and $50 on the trade. And we can actually look at it and go, okay, well, what would have happened, because on that move right there. 43 pips, boom, it's going down. With volume, the number's worse than expectations, okay? So let's say you did $40. You're at break even right now. Because the thing flies down, you've made 20, you've lost 20, and look at how we keep breaking lows with exceeding volume over and over again. You don't got to ride this thing out to the end, okay? If anything, you should be hopping in and going short right now. So, bar breaks down, volume exceeds, bar breaks low, goes short, followed on down, keeps happening. There's another entry on the pullback. So, little apex pullback right there on a time-based chart. Pullbacks right there, volume exceeds, it's going down, breaks the low, get in again. I mean, literally, you could get in again right there, you could get in again right there. You could add on to this trade almost every single bar on that volume exceeding breaking the low. And that's a, what we call P3 trade or a, continuation trade. And you're just grabbing those moves. Now, they're only for the current hour. You're not, looking to stay in them forever. And it's sort of an interesting phenomenon. I've really noticed that markets will go down and then they'll go flat. And then all of a sudden they'll usually have a lot of except for this where there's news, they usually have more of their volatility at the beginning of the hour, which could easily lead to a reversal one way or the other. And then they'll go flat and they'll last usually 15 to 20 minutes. Now, this is, like I said, an exception with news. But it's a really interesting phenomenon to watch, just the algos kicking off the orders and then things backing off. So that's why I like to make sure I'm out of that trade because it's a whole new hour when the hour comes on back up. Okay, now let's go in. We had the existing home sales report as well. And on the existing home sales, that was yesterday. That, wasn't on the show yesterday, but I wanted to go through and walk through that one with you. Existing home. There we go. Okay, so 10 o'clock, existing home sales. And again, usually not the biggest mover. So let's see if it was this time. So let's hop on over euro dollar. We've had some, we had some good volatility, some awesome plays yesterday in the S&P, just a perfectly smooth trend. And we'll take a look at the indices today as well in a little bit. But so going back to yesterday, checking out when the report came out here in the morning. Showing the right date. There we go. That does help. All right, so verify my date, verify my time. On my time there, I got existing home sales being released at 10 a.m. Okay? So right here, what kind of move did I get? Nothing that impressive. Actually, just an average market expectation move, 23 pips. Perfect condor. There. We'll be back right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. And glad to be back with you here. We're checking everything out. We're going through different markets, different charts, and just trying to put the pieces together. And so we're talking about right now the existing home sales report that came up yesterday. So let me grab that chart for you, throw it up on the screen. We were starting to go into it right before that commercial break. And talking about euro dollar. On the euro dollar, we rarely see a move on the day that we have existing home sales of more than 50 pips. Again, just one time in the past 12 months. And so my goal on this trade is actually to pull out a $40 to $50 max profit on the trade. And if I can do that, awesome trade. And that's one of those trades you just set and forget, literally. You hop in at 8 o'clock, you choose the 3 o'clock expiration, and it worked out perfectly. So right here we look at it, we go, okay, well, we wanted to stay within, at least $40. That's our break-even point, okay? But where did it end up? We got in, we go take it right over here to 3 o'clock. We had a 12-tick move. What does that mean? Well, that means if you got $40 on the trade, which you probably got more, but let's just say you just got $40 on the trade, then you gave back 12 of it, you kept 28. Not bad. For doing nothing. And put the trade on, and it has a massive, if you got 40 pips on, you only have a 40 pip up and down break even. That's an 80 pip wide range of break even. And then you can go another 40 pips from there for a 1-to-1 max risk reward ratio. That would give you a 160 pip wide range for a trade to have a 1-to-1 risk reward and at the same time have a very high probability because it's just got to stay within that range. And worked out exactly like we expected it to. And check out, we basically had the move on the news right here. See where we have the expected volume exceeded? And the rest of the day, pretty much a whole lot of nothing happening. So, and by the way, I'm looking at volume on 6E even when I look at euro-dollar. I always use futures forex volume when I'm doing this. But that gets that right there. And not sure if my chart is showing or not, but can you make sure my chart's up, please? Anyway, so we got that going. And yeah, let me update that for you. Here we go. I don't quite know what's happening. But I want to make sure you can see the chart. Otherwise, it doesn't make a lot of sense when I'm going through it. And I'll reset the screen over here. There we go. Okay. So hopefully that'll come on through now. All right. Let's look at a caller while they're getting that resolved. We got Rico from Costa Rica calling in about Apple, man. How you doing today?
Good. Hi, man. Listen, we talked last week, and thank you in advance if we get cut off again because of my internet connection in Costa Rica. We talked about Google, and I didn't talk to you till after the fact. I got a good trade in, but I didn't hold it long enough, and then the next morning it opened up like 25 points, 24 points above what I bought it at, and I quickly closed it that same after hours. So I wanted to talk to you about Apple because I'm all the way looking on my chart to January 27th when Apple had after hours reporting, and that bad boy fell off the table like from 550,
massive,
560 down to 515.
Yeah.
So what are you thinking about the range possibility, and do you see any signs of any direction that might be for the foretell right now, because we're presently down $4 in Apple?
I'm really careful to not ever be directional, at least without a hedge, going into a news announcement, because honestly, at best, I'm going to be 50% right. Okay. So I can do a lot better on directional trading, but as far as like when news comes out, you think about Google. What happened? Ran up, basically about 20 points, right? And then it gave it all back in like 2 seconds. So, but it could have ran up 20 and ran up 40 more. As far as Apple stats, are you looking to? Are you hopping in, hopping out, doing the after hours trade, or are you going to go in? Okay, stay right there. I'll be back.
Okay.
Stay right there. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going back here to the Diagnostic Trading Hour. And so we're just going through a few different things. We're talking about Apple and its history and, you know, some of the better ways to trade it. And got a caller on right now. I just want to make sure you're still there, Rico.
I can hear you. Can you hear me?
Yeah. Awesome. Yeah, so you're right there. After hours movement, just looking over the last 4 announcements, we had a 7.5% down move. That's probably the one you're talking about on the January 27th. Is that right?
Yes, sir.
Okay. And then we basically went from 547 down to 505. If we go down to October 28th, we had a 1.2% up move. Okay? On the 23rd, we had a 4% move. On the 23rd of 2013, we had a 3% down move. So that was a much larger than normal move that happened on Apple on the last release. So it's important that you understand that. So don't expect a 7% move, a 40 point drop or rise in Apple today, just based on what's happened so far. That really I would not want to put my plan based on you want to definitely look at the history, at least the last 4 cycles, ideally the last 8. You dig in a little bit deeper, and by doing that, by saying that last 8 resistance, so you can see like what happened last April. You know what I'm saying? Not just the so you actually get a whole picture. So you got last April, but what happened on the other ones? I mean, last April we had a 3% drop. Okay? So we're on the April release again, so who knows? We may have that. So, yeah, easily a 1% move, without a doubt, probably closer to somewhere between 2 to 5% would be my expectation on Apple for the release that's about to come out. Now, you're trying to figure out what are you going to do with it, right? How are you going to take advantage of it? How are you going to trade it?
Yes, you're reading my thoughts.
All right, so what are your as funny as it sounds, what's your initial ideas? Let's talk about that for a second. What do you got?
Okay. First initial idea is to make sure that I got my trading ticket for extended hours, because a few years ago I had the most beautiful trade and it hit my number, but I had the wrong, you have daily hours, after hours. You have to put extended hours. For any listeners out there, make sure your trade ticket is for the extended hours.
Right.
Anyway,
because you have current day. Yeah, you also have to make sure you're enabled for extended trading with your broker too. So because some don't do that.
Yeah, well, no, I'm okay. Yeah,
right. But I'm saying, as far as sharing tips with everybody, not everybody knows that you can trade after 4 o'clock. On stock.
Yeah.
So yeah, okay. So make sure your ticket's out there. Make sure you got all that.
Okay, so I'm going to put my ticket. Depending on the quickest reaction, I'm going to have 2 tickets for the short side and for the long side. And each one I won't send, but each one will be way above the market, below or above whatever the action dictates. And what I'm going to look for is to catch a bounce or a short after one bounce and then upward, and then catch the short side down possible. Try to listen to the news conference, but there's always a vicious action. And Darrell, the other thing is, the next day, like with Google, I bought Google in the after hours. I can't remember right now. It was like 5:22, and it opened up the next day at 5:50 at 8 o'clock hours. And I certainly didn't hold on to it. So with Apple, I would think there's going to be a lot of digestion one way or the other. And just in conversation with you, if Apple gets creamed big time, then it could have early morning tomorrow, more creaming, beating it down, and then a fantastic possible chance for a bounce that day or the next day. That's where I'm coming from.
Okay. Yeah. Okay, so one thing I'm going to tell you, this is just my experience of trading news like crazy, is I went through about a 6-month period where I tested out, like doing an OCO with an OCO, where I had a buy above and a sell below the news. And to do that accurately, so to do what you're talking about, because you're about putting a buy market above and a sell market below, right?
Yeah.
And I'm assuming you're doing a market limit, like a stop limit, so that way you don't just get filled at the top.
Right. I won't send the ticket until the first reaction happens, and then I'll be able to move on my trading platform. I'll be able to move the trade, where I want to, the price where I want to.
Okay. So just make sure you're using a limit, because man, in that after hours, I mean, they could literally fill you $2. I've literally seen spikes $5 away.
I don't even look at the market order thing.
Okay, all right. I'm just making sure you know. So,
yeah. Thank you.
It's a painful lesson if you don't. So, for anybody else out there who might be trying, making sure they know too, right? So, making sure you're always using that limit order, especially in market, after hours market trading. And just looking at the trend right now. Okay, my view on Apple. Let me pull it up.
Okay.
And so we've been in an uptrend. Okay. Moving up, nice. But let me clean a couple things up. Right now, we're moving just normal expectations on movement. I'm going to pull this off of the chart, and just to make the chart a little more visible. Some important levels that you're going to want to be aware of if you're going to trade Apple today. Okay. Yeah. The deviation levels. So like 523, 518, 514. Those are going to be strong levels. Okay. And then on the way up, you're going to want to be aware basically almost all of them going up because we've already fallen down. But starting out, I mean, if you got a pen and paper, 549, 544, 540, 536, and 531. Okay?
Yeah.
So those areas where, like let's say it explodes, takes off, I easily see I can easily see it pop into 515, and then, just doing this if it were to go down, okay? And then if it goes up, I see it, just probably going up to about 536, maybe 37, 540 right there, and then just flattening out. So, it's like, don't be surprised if that happens. Do not expect it to go past 505. Like, that would be, I don't see it happening. Okay?
Okay.
Because, I mean, when we get in these trades, we still want them to move, like, forever, right? There's, like,
right.
I remember, like, once I did that Google trade, it's like a 100-point move in Google. It's just insane. But that's not your expectation on a trade. Now, as far as trending, what I do see is I actually do see a very bearish pattern on Apple. Okay?
I agree.
And so if I look at this, pull this out of the way. One, we've been up here over and over again, and we're not exceeding volume at all on expectations. Okay? I mean, we're making all these big moves, and we just keep breaking right back on down. The biggest thing I see is sort of what I call a barely missed X. Okay? And pattern I use, alert, pivot, entry, exit, or at least confirmation, not necessarily exit, but confirmation on the pattern of the trend. And I look over at this trend right here, and here's what happens. It goes in, and once it has a new peak, an apex, like a top of a pyramid, and then pulls down, pivots, pulls back up, but isn't able to break that high. That would already be a BMX, okay? And that would make me very, very cautious about buying again until the market literally, I get an entry maybe like 518. I'd be waiting a long time, or I'd wait for it to break the high before I got into a new entry. Well, then it goes down, and it does it again. So we've had this happen twice over the last 2 days, okay?
Uh-huh.
And I'm just basically, I am, that right there, that's bearish. Now I have basically two. I just now had three. You can call this, basically this would be a triple or quadruple top, in the market. And it keeps trying to hit it, keeps trying to hit it, and it cannot break it. So that's very bearish to me. Now, I would definitely be hedging that off, just in case, they're playing with it because of earnings. So do you have any kind of hedge? What kind of position size are you doing?
350 shares.
350. Okay. And have you looked at, and I'm just talking about a worst-case scenario hedge. You get into something and it flies against you, okay? Have you looked at putting on any kind of hedge on that trade? Or not?
Honestly, no. Because I got fast fingers when it comes to the after-hours trading. I've got multiple trade tickets ready at all given moments, checking, making sure, like I said, they are for extended hours. They have the same amount of shares, 350, buy or sell, or, I'm on the Thinkorswim platform, so it's clean cut. But I'm also, Darrell, I'm very cautious about just being coy, letting it do what it wants after the first hour of the trading, and then if it maybe it'll do what Google did last week. Last week Google bottomed at 521.5, and then opened the next morning at 550 approximately. And maybe Apple will have more news that it sheds in the after hours that people don't wait around for, and anything's possible. But you asked me, do I have anything hedged? The answer is no.
Okay, so the reason I bring it up is Apple is one of the few stocks you can get weekly options on. Okay?
Yeah.
Meaning only 2 days to expiration. Yeah, I know they're going to have some IV pumped into them because you got earnings coming out. But now when I say hedge, I don't mean like giving up a lot of your profit. I don't know how much you're going for. You going for 50 cents? You going for $5? Like, what kind of move are you going for?
See, if you had seen, maybe you did, the after hours of Google last week, it
I traded it live on the air. Yeah, I definitely saw it.
Yeah, that bad boy bounced like 15 points in the first 2-minute candle.
It dropped. Yeah.
No,
yeah.
1 minute candle.
Yeah.
And I took the attitude of, let's see what kind of settling is going to happen. I practically got it at the very bottom, but I waited like too many minutes after the bounce was already happening, so that's why I'm going to have to be more fast.
And this is why I'm trying to bring this to your attention, is you need a hedge. You could do the same thing you're doing. I mean, if you go in and you're telling me right now you're going to do 350 shares on Apple, okay?
Yeah.
Which means you're going to be popping in, $527 a share. I mean, are you using Reg T, using day trade, using portfolio? What kind of margining do you have?
I'm okay. I'm covered very well, thank you.
Okay. Well, I'm talking about margining level, not account size. So, because I mean, Reg T means 2 to 1, and then just for our other listeners, okay? So Reg T means 2 to 1, and day trading margin anywhere from 4 to 20 to 1, depending upon your broker. And then portfolio margining means a 15% move or max risk if hedged off with options. So it actually increases your margin.
My broker and I have had 4 to 1 for as long as I can remember, since they changed it many years ago.
Okay, so that's day trading margin. Okay, so I'm just asking to ask how much, it's not about how much money you have, it's how much money you're putting up on the trade. Like portfolio margining, if you have with Thinkorswim, because I got an account there, and what you do is, and again, it's all about your account size, and I'm not asking, it doesn't matter, just to let people know. If you have more than 125 grand and you understand options, you can actually tell them you want a portfolio margin account. They give you like a 20-question quiz, and then it'll open it up where you get that really cheap portfolio margin account. It's pretty cool. And it basically it lets you get, basically you only have to put up like 15% of the margin. Or if you have a call on there, you could actually put $5 to buy stock or whatever. Like a $500 stock. So you can really get a lot more margin. But what you tell me, if you're going to go in, you're going to do $527 a stock, and or $527 and $350 a share, and divide that by 4, you're putting up $46,000 on the trade. And go, okay, well, how can we hedge this off? What kind of move are we looking for? If we're only looking for like the last, maybe the last 50 cents or a couple bucks, that's one thing. That's sort of where I'm trying to get at, because that lets you know where you might want to consider looking at some options over here on Thinkorswim. Even if it was just a catastrophic insurance in case something blew up, things happen. I don't care how fast your fingers are, okay? Things happen. And, you trade long enough, no matter what you think can't happen, will happen. And it will happen, in the worst way. And I don't wish that on anybody. I more wish it not happen on anybody. That's why I'm bringing it up. But it's really good, especially when you're trading this news. To have a capped risk, either product or to have a hedge to help out with that. And you can get these options. Really cheap. Right here, I'm on Thinkorswim on my screen right here on Tiger TV, and we have some decent cheap options that actually take you to Friday in case there is a big move going the other way. So you might want to check that out to help hedge off your position, all right?
Yeah, appreciate the advice.
All right, you bet, man. Thanks for calling in. I'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So, doing a wrap-up right now, seeing where the markets are at. Wanted to pull up a couple markets real quick before we end the show. But right here, wanted to go in and let me get one of my regular charts. That's a little larger chart size than I normally use. That's for stocks. And I want to put just a couple indices. Let's check out, I guess, the Russell. Pull that one on up. We'll see how it's going. And it'll take just a second while I'm getting it going. And there we go. All right. So that one's coming on up. I also, while that's loading, I'm going to go ahead and give you the just sort of the countdown, I guess, for what's coming up this week. You have a little bit of heads up. There's not a whole lot left on the docket for the week. And I'm refreshing my little news plan over here real quick. Tell you if you got anything you need to be aware of for tomorrow, okay? And, yeah, just look at that. Just so quiet. But, anyways, quiet day. Let's see here. For tomorrow, what we're going to have is, there's weekly natural gas inventories. Obviously, be very, very aware that Apple is coming out, all the different earnings announcements, everything else. Apple's coming out after the close at 4:35. Of Qualcomm is coming out at 4 o'clock. That'll impact the NASDAQ at 4, so be careful if you're an NQ trader, you're trading US Tech 100 or whatever. Over on the markets over there, let's see what else we got. We have, tomorrow morning we have Verizon. That's going to come out right at 7:25, at least when I say times, I'm talking about wire release, which is when they send out the newswire of the earnings results, and then they have a conference call. That's scheduled right now, looks like for 7:25. It's like Facebook. I'm assuming they're still on the docket. I didn't get a confirmation. I didn't go back and pull the check on that. Facebook earnings. That may be at 4 o'clock today. Yep, Apple and Facebook. And they are scheduled actually to come out at 4 p.m. So that could actually have a pretty good impact as well today on the news. So be really, really aware of that one. Okay? Again, if you're a NASDAQ trader, Qs trader, basically if you're an indice trader of any derivative thereof, then you need to be aware of that. All right, so that gets you Qualcomm impacting NASDAQ. That gets you Facebook impacting NASDAQ. That gets you Apple after the close impacting NASDAQ. Tomorrow morning, you're going to have Verizon. That's going to impacting the Dow. And then tomorrow, right near the close, you're going to have Microsoft impacting the Dow and NASDAQ 100. And that comes out at 4:05. So again, right before the close of the futures market there, you got about 10 minutes. And that you want to be aware of. A couple other ones I need to do a verification on. But I believe we got Amazon and we got Dow. So Dow, look there, Visa is going to be coming out at 4 o'clock. And we have Amazon coming out, obviously impacting the NASDAQ there, at 4 o'clock. So, gotta love earnings season. Sort of, it's interesting because sometimes it sort of jacks with your indices when the big names are coming out, like today with Apple. I mean, it just makes things just bounce and do nothing. And then moves huge, and then, so it's like you love earnings if you learn how to embrace them, but also you hate them because you're like, come on, do something. And what I like to do is I actually like to play the ranges whenever earnings, or before they come out. So just the expected moves. It's like, all right, hit the expected move, give me a break below, boom. And just expect a flat market, because who wants to take a position on a major index when massive movers are coming out? And not a whole lot. So just it's learning what to expect so you can take advantage of it. I hope you all have a great day, and I will see you tomorrow right here on the Diagnostic Trading Hour. Stay tuned for another great show.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.
Promise me, girl, I watch your dream come true.